All right, let's do this. Um, so this video is for my bros. I'm here to show you the sauce. I don't know if I'm gonna be able to get to everything I wanted to get to. Um, and this isn't just gonna be like quick put together. I just hope this is gonna help. But I'm gonna try to go over quite a few things to kind of help you get started. Because that's the one thing everyone struggles with is how to start. Now, even if you're given the stuff to start and you know how to start, what's tough is where you should actually start. The thing is, everybody has a different starting line. Everyone starts somewhere different. Everyone. Some people start behind the start line or in front of it. Some people are starting 6 feet under. Okay, so let's just get to the sauce. Um, so that you understand kind of where I come from. Because I don't know who's going to see this, man, but I've been trading for 3 years. And to be honest, it kind of clicked right away. I mean, trading is easy as shit, truthfully. But once you get to a point where you start to understand it, it really kind of is just a mirror. It's just a mirror. It's about understanding yourself and mastering yourself and then just becoming really good at playing the game that trading is, which is, clicking a freaking button. Speaking of which, let's look at the markets right now because they're kind of going crazy. Um, so I actually took some trades earlier, probably about an hour ago. Quite a bit has happened since then. Jeez Louise, and it's going crazy because it's I think Chinese Shanghai Open. I am not going to trade this. I'm already 16,000 up on the day, and I'm just in a Topstep Express funded account. I'm really not trying to actually trade more. There's no point. There's no point. And so, yeah, man. So trading's all about being able to control yourself and master yourself. And once you can do that, you can play the game pretty freaking good. Because the game itself is simple, easy, straightforward. But let me break down a couple things of where and how you can start and how I would start if I could go back and just do it right from the get go. So, like I said, I started 3 years ago. I was a little bit younger, a little bit more reckless. And while I was invested in making myself better, I didn't actually put forth the effort in kind of stress testing. Let me put it that way. I feel like it's always about stress testing yourself. Like, are you going to stress test yourself to be the best version of yourself? It's like taking risk within yourself. It's like, can I do something that I'm not sure I can do? Can I push myself a little bit further than what I think I'm capable of? And at that point, you become, like another level of self aware in which your true self is shown to yourself. Like, you see a weakness that you have, or you see a strength that you have. And then you just got to know how to play around that. So, me, for example, I okay, so first of all, I trade gold. So gold is really freaking easy because it's so consistent in how it operates. It's incredibly easy to read. I think it's honestly probably the most um, beginner friendly futures commodity to trade. I think that right now is not a good example of that because I think it's a little bit chaotic. And that's just because of all the things happening globally, socioeconomically. I mean, this is insane. I mean, over this is just 100 points of movement, but I'm on a 1 minute chart for frick's sake. If I look at the 15-minute chart today, gold has, since I traded this morning at 12 o'clock, it's dropped over 300 points, more or less, which is crazy. Or I'm sorry, 200 points, 300 points, whatever. That's crazy. This kind of movement's unprecedented. Now, um, I mean, even just this movement in the past 1 minute is crazy. So I'm saying that gold is really, really easy to trade, but of course, this is like not the best example to be showing anybody because it is not exactly that nice right now. and I get that. But I want to showcase how to like read a chart and how to trade once you know how to read, because like knowing what the chart is saying and knowing how to trade it are two different things. Um, and let me just preface a lot of this by saying that I don't know exactly how to explain what I know because it's kind of just vibe check all the time. But it's vibe check with the two or three bits of information that are relevant. And so to me, it's all about like kind of behavior of the markets, supply and demand of the markets, overall price, relative action, like relative price action. I use that term not as in like the not the randomness of price action, but more of like the relative price action. Hope that makes sense. I mean, I don't have closed captions on, but um, so let me point that out. So looking at price, looking at the action that happens at price, and then looking at um, like the supply and demand that exists um, in like just kind of what happens. So like there's a lot to understand and a lot to break down. And I'm just going to break down like little bit by little bit. But honestly, when it comes to understanding and learning the markets and learning how charts are read and what you do with them, it's a big vibe check, man. It's all about vibe checking. Like if it's going up, go up with it. It's just about knowing like when do you go up with it. And if it's going down, you go down with it. And like when do you go down with it? Right? You feel me? So it's all about timing. Timing and execution, but you got to know how to like read what's going on first. So understand that this is like charts, like these candlestick charts, which are like not everyone's like favorite thing. Some people like to do like heat map, footprints, other bullshit. It doesn't matter as long as you're able to read the information. It's all the same. It's just about what you're more attuned for. Okay, so I have a couple things on my chart here that maybe looks different from what you're accustomed to. Number one, I have a volume profile at the bottom. This shows me not only like the actual volume for this 1 minute candle, um, right? Like how many orders are being filled and what's the kind of bias? Is it more people buying than more people selling? That kind of thing. Obviously, if it's green, more people are buying. If it's red, more people are selling. Now, that's kind of obvious because you'll see it with the color of the candle. As we know, green candle means more buying, red candle means more selling, right? It's kind of intuitive here. The price goes down, people are selling. Price goes up, people are buying, more or less. Now, in futures, you need to understand that buying and selling doesn't happen without the other. So technically, like every time the price goes up, it's because someone bought and sold at that price. Not the same person, probably, but a person bought and a person sold. And so like what that means is um okay, I'm just doing this because I want it to be seen that let me move this a little bit more appropriately. So what that means is I'm honestly just seeing if like what's gonna happen here. I'm very curious because technically, like, it actually seems like this is generally going to keep going up, but I just want to see. So, like, taking risk like this is important for learning, right? Like, I just go into a trade to see what'll happen. When you're learning, this is important. When you are kind of like not at that stage, maybe don't just do random stuff like that. I'm only doing this to show you like the kind of attitude you kind of have sometimes. You have to take risk and be okay with risk and see how you feel about risk and what happens to you emotionally in these moments. Okay. Um, Now, so I have the volume profile here. Next, I have the VWAP. The VWAP is really cool because the VWAP is the volume weighted average price. What that basically means is, I mean, it depends on how you weight it because sometimes people weight it a little bit differently. But how you weight it is going to like basically the price is going to try to centralize around the VWAP. It just kind of does that. Um, and if it's above the VWAP, it means the price is honestly in a good direction, that the commodity is being traded fairly and that people have a relatively positive outlook on it. If the price of the commodity is below the VWAP line, it means that this VWAP is, I'm sorry, it means that the price is, it's honestly like it's being undervalued, underappreciated, and that it's a potentially a good value to be buying into. Um, hey, look, my trade's going well. Um, I don't know. I don't think it's gonna hit this profit target. I actually think it's gonna go like right here, maybe. Um, yeah, it just kind of depends. I feel like it might go like down to here actually, but I always try to play a little bit safe. I'm always very like modest when it comes to my take profits, and then very what's the word? Safe, or I'm sorry, loose with my stop losses. Like I tend to risk more than what I'll make, but I don't care because I'm pretty confident. So like that's kind of how I approach things. Hey, what the heck, man? Don't you love when it's like almost hits your profit and it's like, no, it'll hit and we'll be happy. Um, Let me see here. It's 10 seconds to the end of this 5 minute candle. I'm actually gonna close this out. And like, well, maybe I won't actually. I was gonna close it out, but it bought up, so I'm gonna wait actually. I'm gonna explain my logic in a second. Okay, cool. So I was gonna close out there if this candle stayed that low, and that's because the selling pressure was high and like nobody was buying. And the next 5 minute candle was about to start. Um, the next 5 minute candle was about to start, but I didn't like that. However, it pushed up, which means that people started buying before the 5 minute candle started. I also didn't even check the 5 minute candles to see what pattern was going on. Otherwise, I actually would have just held that because looking at it now, it's um, a very clear movement. And so, okay, anyway, let me tell you how to read charts. I'm gonna get sidetracked a lot. So we have the VWAP, and then this yellow line here is the MA, or the moving average. The moving average here is important because it's basically like a consolidated line of the relative price. Again, same kind of approach as the VWAP. If it's above, it's below, etc., etc. Typically, whenever something is trending, we'll be bouncing up and down in between it, on top of it. We tend to bounce on top of it. Like right here would not be a bad spot to go long because the 5 minutes bouncing off of the MA here. Will it actually bounce off the MA? I don't know. But if I felt like it, I'd probably go long like right about now. I'm not going to though because like I've actually traded too much today. Um, I didn't even see that last trade. It was completely pointless. But yeah, I would have gone long here at 4104. So let's just see what happens by the end of the day. 4104. Okay, let's remember that. So it looks like I'll probably lose that. That's okay. So that's the MA, the yellow line. The blue line is the VWAP. We use those, or rather, I use those because they're very simple, but they just kind of help consolidate for me and understand for me where the overall price is moving, and like what the trend is like, where the price is relative to the average price over a certain period of time. My MA's centered over 21 period, 7. Let me see that 21 length with a smoothing length of 7. EMA volume. Oh, oops. My VWAP is sourced to high, the session high. So that's important too. Sometimes these things are different depending. Like everyone maybe looks at it a little bit differently depending on the time frame you're looking at. I tend to look at the 1 minute always. And I look at the 5 minute almost always. Oftentimes, like depending on what time of day, like if I'm trading at 6:30 in the morning, I'll be looking at the 2 minute instead of the 1 minute, just because the 2 minutes, I'm sorry, the 1 minute's completely useless at 6:30 in the morning, California time, right? Or market open, U.S. open, New York open. But for the most part, I'm always on the 1 minute. And then for the 5 minute, I always look at as a basis for understanding my overall trend for the session. And when I look at trends for the day, I'm looking at the 15 minute typically. This is on gold specifically that I do this, and this is how I operate almost always. And yeah, like I said, I wouldn't have gone long there. If I did go long, I would have exited out because truthfully, looking at the 5 minute, this is a huge short position. I mean, it's huge. And so like, okay, so that's like very basic fundamentals, right? We have the volume, we have the VWAP, we have the MA. That's my basis. Now, in terms of understanding other aspects, it comes down to looking at what kind of volume and what kind of input are we getting in the markets at any given moment. So let me show you how I read candlesticks. So we have this. This is a 1 minute chart, and I'm looking at this massive this massive spike in buying right here, kind of right here, but mostly right here. Like, this is important. So at 5:30, we had a massive buy-in. This is a ton of volume, and technically we had some good buy-in here, but this is really just bounced back from all this. So, like, honestly, I would just negate all of this lower half movement, and I would, if you can see my cursor, I would just showcase the price from this point and up. Again, this is on a 1 minute, so take that as you will. If I change this to a 5 minute, you can see that actually in the 5 minute, it literally just cancels out all of that bottom half stuff because it's not relevant. Technically, this is just no man's land basically. But this price from here and up totally makes sense. We get it. This is where we would kind of argue price to be at. Now, again, we have this massive buy-in candle here, this massive buy candles here, massive buy candles here. This is huge. Now, this is a lot of volume that pushed the price up for a good period of time. Now, what that means to me is that we're going to come test those areas again. So when I see a big ass buy candle, I'm thinking, okay, so when is this going to come down and test those areas? You feel me? I'm not thinking, oh, okay, I'm going to go long. So like if I saw this, I would say, okay, whenever we have a point in time in which we test back down onto these levels, then I'll buy in. So I'm looking at, like, if I'm going to go long somewhere, I'm going to look for a red candle to be an indicator if I should go long or not. If I'm going to go short, I'm looking at a green candle to be my indicator whether or not I should go short. To say, okay, like, we've pushed up a certain point. Like, look, we had all this massive push down for 5, 10, 15, 20, 25 minutes, 30 if you want to count that, 25, 30 minutes. We're going to come test these areas up. I was like, okay, we tested all this down. We pushed down. Let's find out where it's going to test up to. And so I would expect a long to go up to here. Yeah, this is pretty reasonable. This is the last price it made sense at. Again, we could kind of cut off the top half here and just ignore it and just kind of push it from here, from this point at 41.23, and say, okay, this is a reasonable area. And now that we push this massive volume up right here, it makes sense that we test down this area. But again, this is why I said this is like not a bad area to go long, truthfully, if I was like willing to risk it. Like this 4104 area, this is not a bad area to go long because we're bouncing off the MA, we're bouncing off the VWAP kind of. On the 5 minute here, the MA is actually pointing upward a little bit. And so obviously there's potential for uptrend from this previous 10-minute period here. And so this is not a bad area to go long. We had a huge area of buy pressure. We pushed down a little bit to test these areas. And it was like a constant up and down battle as we went down. This wasn't just a solid push down. This was a constant buyback, sell back, push down with some bounce up even. And so it makes sense for us to bounce off up here and go up long and maybe even test these same highs again, these relative highs. Again, relative price action. This is a relative low. Look, this is a peak from earlier. And so it makes sense for us to test on these areas. And so, like, these kinds of patterns that I'm talking about, I don't know if they have a name for it, my brothers. I just see that it makes sense. Like, think about if this was an actual product. Oh, wait, it is. It's gold. So think about if gold's price hits this area. The fact that it didn't even touch this area, and we're back in it. People are buying right here. Or a big conglomerate is just absolutely selling off. Who knows? But under normal circumstances, maybe not these, this is a massive buy area. People are buying. Or at least I would. Like, if this was a hot commodity that is necessary, not a safety net like gold, then I'd be buying right here. And that kind of logic can be applied. And so I'd be looking for a long in this area to go about to 41.25 probably. Again, I'm very modest with my profit margins or my profit targets. And I tend to be right, but I also tend to be a little too modest. So take that with what you will. So that's kind of like the very, very basis. A lot of this is about vibe checks. It's about vibe checks and understanding how the markets operate. When you see a large buy volume, or rather, if you see a large influx of price that pushes price up, you have to understand what the price is doing when it gets pushed up. Like, why is it pushing up? Because people are buying it. And why are people buying it? Are they buying it because they went short earlier and this is them getting out of their short? Is this people completely exiting their shorts by buying, because that's how you get out of a short. You sell to enter and then you buy to get out, and they're adding to that massive buy volume that pushes the price up, right? And no one else is selling. So you have to understand how price goes up and how price goes down. When there are more people and more orders for buying than orders for selling, the price will inevitably go up. People are not looking to get rid of their product. They're looking to either buy it or do nothing. And so that's what pushes price up. There's more buyers than sellers. And this moment, price is going down because there are more sellers than buyers. Or sometimes there's just not anything. And if there's nothing, the price either doesn't move or tends to actually just kind of go down. Especially when we're in a downtrending market, the sellers won't disappear. You know what I mean? They won't disappear. So, and that's the same true for when it's an uptrend market or a bull market, that kind of thing. And so, understanding the behavior of the market and understanding the behavior of the people when they're in a trade or what's happening to the price, and understanding the commodity and what the commodity is worth and what would happen to the commodity when the commodity hits a specific price point. And you can see what happens by just looking. You say, look, the price pushed down really, really hard right here at 5:10 p.m. Pacific time. It pushed from like 40.50 down to damn near 40.20. But it was immediately bought up really, really hard, and we haven't touched back on these areas. And so it's possible we touched on these areas at some point. But it's also possible we just never touch this spot again. It's not really relevant. All we have to think about is that people were buying up here, and that's important. I'm sorry, people were buying down here. Right? So we know that in the future, this is a price point that people are interested in buying at, considering the overall price point of gold over the span of these 12 months. Now, another thing to know is whenever a movement, a trend has finalized, it'll inevitably like the price will die out. The price will stop moving for a little bit. Anytime a big movement happens, all of the people buying and selling have stopped buying and selling because it has hit a specific point. We've accomplished what we wanted. So here's how I kind of like narrate how it goes here, right? A ton of people are selling, and they're selling a ton of volume, and it pushes the price down all the way, all the way, all the way. And as the price hits anywhere in this area, at some point or another, people started buying out of their short, and it pushed the price up. On top of people already buying, it pushed the price up quite hard because everyone got out of their shorts at this point on this candle, more than likely. And if they didn't, it pushed up, and then people went short again right here and pushed the price down. But then this is when people got out. After the price pushed down again, they 100% exited their shorts at this point, which pushed the buying pressure back up. This candle, even though it shows that it pushed down, this is actually a dead candle. I guarantee it was a dead candle. I can't go back in time and tell you, but I guarantee it didn't go anywhere. It was just kind of meandering around until everyone was like, all right, all the sellers are gone. And then everyone started buying. And it pushed the price up really hard. Even this candle, again, I would say this is a candle that meandered the entire time. The 5 minutes that it was there, it meandered in this price point. Remember, we theoretically entered at 4104. It was preemptive because we still had a 5 minute point in which, again, after big movements, it'll just stop and kind of not move anywhere. We went theoretically long at 4104. It seems to be kind of fulfilling this. Let's see how it operates for the next 2 to 5 minutes and see if this 5 minute plus another 5 minute pushes us up to 4125, which was my prediction. We'll see. So it is 7 o'clock, which is kind of a dead hour. So we'll see how that actually plays out. Okay, so I've told you about the MA. I've told you about the VWAP. I've told you about how some relative market psychology, kind of behavior analysis of volume, and how you can kind of see how price reacts. I think a lot of this is understood not necessarily through words, but just understanding it either visually, through your DOM, through your candlestick if you'd like, and just watching the markets live. And that's a really, really important factor, is to just go into your market and watch it. Spend a lot of time watching it, and you'll learn so much from it. Okay. Let me quickly take a look at my notes that I wanted to go over. So I'm trying to show how to read charts, right? I think this honestly pretty much covers it. I mean, you look at your MA, your view app, your volume, you read kind of the analysis of what the price is doing at any given time, watch your DOM, you know, keep track of the order volume. People seem to be buying either in one or twos at a time. Um, and like sometimes a little bit more, but you got to be careful buying in volumes higher than that. You saw me earlier take a trade with probably a lot of contracts. That's not necessary. I'm only doing that because I'm using Topstep express funded account. So, but ordinarily in a real account, I'm going to be using 1 to 5 contracts for each entry point once at a time, like one entry at a time, because every order you put in the market is going to fluctuate the price. If I went in 15 contracts on a live market, it's not going to get filled. I mean, some of it might, um, but I would spread it out over this entire price point. I like spectrum it. I would put like two, 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 and like aim down the area. But I'd be buying as it pushes down, basically. And that's actually how I trade normally. If I could go back in my earlier today when I was taking trades, I would showcase to you um, that like I'd enter in with like 2 or 3 contracts, and then I enter in again as the price pushes down and down, and then I keep entering. Um, for that fact, it was actually on this candle that I was entering in long down here. It pushed down, I started going long. Um, I went like I think 5 here, I think 2, and then 3, and then 5 more, and then it like hesitated for a bit, and then popped, and I was good. I took profit pretty quick. um, anyway, so that's how I read the candlesticks. That's how I read charts. This can be applied to pretty much every chart, and that's how I do every single chart. I look at the 1 minute, I look at the 5 minute. Occasionally, I look at the 15 minute. But honestly, the 1 minute and the 5 minute tell me quite a bit of information. I like the 1 minute a lot because it just gives me really accurate intraday data, and like knowing when I should enter or exit. Like it gives me like quick entries. Like this is a good entry point. This is a good entry point. Like I like to enter on red candles or on a candle that gets rejected. Right, like this candle right here pushed up, got rejected. I'd enter here for sure. Um, Especially just because it was at 7:01, and just the timing of things. So um, that's pretty much it. This was a long video. I can try to cut out some things, but I think this was pretty good. Oh yeah, and I want to showcase to you where I get like news and stuff. It's not super relevant depending on what time frames you trade at, but this is the website right here. I just tradingview.com economic calendar. I can check out all the news that's relevant to the USA all throughout the week. Today is Tuesday. And so I get to see all the news at different time periods. Not too much news this week. Thursday has a good bit of jobless claims. Oh, jeez, my scroll wheel doesn't work. We have some Fed national activity. This is the real stuff. This is the stuff that really affects CPI, inflation data. This stuff is really important. You'll see a lot of this information affect like the Nasdaq or the S&P 500 quite a bit more than gold, truthfully, because gold's pretty stable, but it definitely still affects it. And so I'd keep that in mind. Honestly, I'd probably exit here just out of safety if I was still in a trade, just because I don't like how this candle finished as a doji. And in case you don't know, like even how to read candles, because I actually didn't think about that. Let me just tell you, like, if a candle pretty much goes nowhere, it moves but goes nowhere, it's a doji. It looks like that. It looks like that. Like that. That would trip me out. But also depends on what time it is. I time my exits off of the 5 minute almost always. I don't exit a candle. I'm sorry, I don't exit a trade until the 5 minute candle's done. And like after this 5 minute candle is done, depending on how it ends, I would exit it, right? So if this 5 minute candle ends like with a wick above it, like a pretty thick wick, I'm gonna exit my trade. If this candle I'd actually honestly exit this trade no matter what, but I'd probably exit um like no matter what at the end of this 5 minute candle. But sometimes like if it like pushed down all the way down here, I would exit honestly. I'd wait for a little bit and I'd re-enter just because like it means selling came in at a good time, and it means that buying hasn't died yet. It's just sellers stepped in out of nowhere. Sellers stepping in like that means people are just taking profits, but that doesn't mean that it's not done pushing up. You have to remember that price moves up based off of buying and selling, and that there's simply more buyers than sellers. That doesn't necessarily mean that, you know, it's something bad. Anyway, so I'm gonna wrap up this video by just watching here what happens to price. Is it gonna hit 41.25 like I predicted, or is it gonna stop just short of it? Yeah, see, I'd exit like right away. I wouldn't stay in it just because after 5 minutes, it's gonna just it might push up, but it could just honestly start reversing. And I don't want to be in it when it starts doing that. So I would have exited here. Let that be known. I feel like I said that a couple times, but like that's just my kind of thought process. I'm always thinking about what could be happening, what might be happening. My finger will literally hover over the exit all button. Like, okay, so if I didn't exit, it looks like it would have hit. Yay for the theory, right? Yeah, and I'd be out. I'd be out of this trade no matter what at this point. So look at that.